Joining me on Decent Cities is the founder of Symbiont, Mark Smith. Welcome, sir.
Hey, Joe. Thanks for having me.
Well, I've really enjoyed getting to know your history. You've got a rich history in the financial space and being very innovative and leading a lot of technological charges in the traditional space, and then bringing that thinking into the crypto world as well. So, if you don't mind, can you kind of take us back to early days of your first couple of companies and how you saw the opportunity to bring buyers and sellers together and make markets more efficient? And give us a little bit of that history.
Sure. You get experience when you hang around as long as I have. So, you get to see a lot. And I was very fortunate to start my entrepreneurial career in the mid 90s when we really hadn't come up with the term fintech yet. We started to use technology to do some interesting things. I started off with day trading. I left investment banking, and the only thing I really knew was finance. And the hottest new thing was day trading. And back then, pre-internet, you had to actually have a physical location. You had a compliance officer sitting in the room. You had people lease terminals, and you paid and licensed software for your traders to use. And my partners and I quickly realized, wow, we're taking all the risk, and the software company's making all the money. So maybe we should think about how we find a way to become technologists as well. And so we reverse engineered. At the time, it was called Terra Nova, which became Archipelago. And we got that front end solution working. And we very quickly said, well, where else can we save money? And we started to analyze the expenses and saw, wow, this correspondent clearing is expensive. Look at these exchange fees. And we started looking at the data of our trades. And we said, wow, this guy's buying Microsoft and this person's selling Microsoft. And why are we sending both orders to the floor and being charged on both? Why don't we try to cross them in order to just have a net order go to the floor and have a less expense? And so we said to those technologists, hey, build us something that will work. And at the time, Island and Archipelago were really starting to grow as these alternative trading systems outside of traditional markets. And they had built matching engines. And we said, hey, let's do what they're doing. Let's just follow the crowd and let's do what the smart people are doing. And so we started to build a matching engine. And it was about that time that the SEC identified massive collusion in OTC market making and in specialist activity. And so this is a parallel to what, foreshadowing of what's to come. We're outsiders, not from the street, building new technology that's gray market at best, but probably breaking the 33 Act from an exchange perspective, matching. So we're doing things that aren't quite regulatory compliant, but there are huge problems in the market that need to be solved. And so take this outsider technology, apply it to this huge problem. We got a solution, we get compliant, and everybody wins. And so we were fortunate enough to take that matching technology into a regulated space, getting a no action letter from the SEC, and being the 7th ECN approved by the SEC. SEC only ended up giving out 15 no actions for ECNs in the history. So we got this great new opportunity to have infrastructure. We started matching buyers and sellers together. But very quickly, everybody figured out how to build a matching engine. And as the street does, consortiums were built, new entrants entered the market. And it became not a question of can you match, but what are you doing with the matching engine? I mean, what's the true value going to be? And that's when straight through processing started to occur. That's when the early stage algorithms started to come out. High frequency trading was born off of that. And then we saw the true explosion of electronic trading. We saw it become ubiquitous market infrastructure. We saw spreads compress. We saw volumes go through the roof. And we saw a much better market, a much more fair market, and a much more prosperous market for all. And then, of course, the internet came in and lit everything on fire.
To your point, perhaps that's just the exact roadmap that we'll see emerging through for crypto as well. So, when you're a day trader and you're in the markets and you're studying that, it's a different mindset to say, I'm going to come out and build technology solutions and start companies. So, as you were living in that world, why were you more drawn towards those types of solutions as opposed to just mastering the art of trading? It
was more necessity, and it was a lack of experience and a lack of finances, right? My first VC was Visa card. So it's hard to put a big position down if you're using credit cards to try to build something. So out of necessity, we saw the lower risk, higher return area to be in the infrastructure building space. You go all the way back to the fabled stories of Levi's and who made the money, the miners or the infrastructure people. We just decided that, hey, infrastructure was the best way to go for us. It was the way we could punch above our weight. We weren't going to trade against SLK, Securities and Kellogg. We weren't going to be Goldman Sachs anytime soon. But because no one existed in the tech space, we could be whoever we wanted to be.
And that's still a niche where bridging the gap between the regulated and the unregulated is a talent that you've now applied yet again. So, one of your, I think it was your third company or so, you sold to Citibank, which took you back into a more of a corporate role, which, I think emerging out of that, you had a bit of a banking is broken kind of opinion at that point. And made a start at a bank of your own, but also started to dabble or understand that this world of cryptocurrencies or alternative stores of value existed. One of the earliest being Ripple. So can you think back to your first sort of introductions to the idea of cryptocurrency, how Ripple came on your radar, and sort of your interactions with its founder?
Yeah, it was an interesting path, right? So I took matching into foreign exchange, built the first foreign exchange matching engines, reinvented how spot FX worked in a company, sold that company, then became a partner in Lava Trading. And Lava Trading had done some amazing things in equity order routing. And we brought those concepts again to foreign exchange and spot FX and started working on order aggregation and interpolation of prime brokers. And that's the banking world, right? FX is really in the banking world. And so Citi saw an opportunity to buy all this great tech, both in equities and in foreign exchange. And so they acquired Lava. And then for all my sins, I had to spend 2 years there through the acquisition as a founder. And I realized, as you say, big banking was broken. And this is 2004, 2005, early 6. You could see old systems based on COBOL that were rickety and no one had any desire to change them. We saw this very entrepreneurial company, Lava, with this baby that we birthed, all of a sudden become a bureaucratic institution. And all the changes we wanted to do were all disapproved by the bank because they wouldn't fit in the model that the bank had. And so I counted my days down. And when my last day was up there, I left and went back to my partners and said, we can do better. And that's the hubris of an entrepreneur, especially a young one at the time. So we did. We went out and founded a community bank in Tampa, Florida called Andron Bank of Tampa Bay. We had this great idea. Today, you'd call it a neobank or a challenger bank. At the time, we called it an e-bank. Right? We got approval to have one branch location and a bunch of, ownership of a broker dealer, ownership of an FCM, and we were going to build this financial services powerhouse with all brand new technology and alternative products and services. And we opened the doors in November of 2007. Joe, the world was ending in November of 2007 as we entered the financial crisis. And the response to it was massive overregulation in Dodd-Frank. They rescinded all of our approvals. They made us become a community bank. They told us that's how we're going to save the world, opening community bank branches. I did not believe that then, and I don't believe it today. And so we hired a bunch of community bankers to run the show. And I left and I went looking for something to solve the problem because I thought regulation wasn't the solution. We went from too big to fail to let's make it even bigger. Let's create central counterparties, CCPs and CEFs and BCMs, and let's force more risk in one centralized area and trust fewer participants. I thought I learned in economics that you diversify risk to get to security. At the time, I had never heard decentralization as a theme at all or distributed systems, but I knew there was a technology solution or could be that would be better than regulation. And so I started looking. And what most people don't know is Ripple in its first iteration, not what you see today, not XRP and all the things you see in the market today, but its first iteration was created by a guy named Ryan Fugger up in Canada. And it was designed to be a community-based network in which you extended IOUs to one another and you netted those IOUs down in a way in which you attempted not to deliver anything of value. So IOU, someone else owes me, that person, we net it all down and we're flat and we're all good, right? Very interesting system. Ryan had a lot of really interesting ideas, but to me, it didn't scale in the way in which would solve for global capital markets. So I kept looking. And then because I was a foreign exchange person, I got the Bitcoin white paper sent to me in 2009. And I tried to read it. I couldn't understand the math, which I still have a hard time with. And as a foreign exchange person and a markets person, I thought, this is just computer scientists having fun. This isn't going to be anything. But I thought, I'll keep my eye on it. And it turned out to be something pretty interesting.
And you it was more than just keeping your eye on it. You bought and you sold. And so, can you talk about your personal journey from the first time you got a little bit of the white paper to the first time you bought your first Bitcoin? I think you interacted with Mt. Gox, and that actually did inspire you to shape your next entrepreneurial endeavor as well. So, do you remember your early journey with Bitcoin and seeing it play in the world?
Yeah, it's hard to forget. So after I kind of went through that white paper and tried to figure it out in 2010, I thought, well, I might as well try to buy one of these things because I'm not smart enough to mine, right? I looked at mining and I'm not a computer guru. I didn't understand it again. And so I thought, well, I can buy them at least. And I did some research and found out that there's a bulletin board called Local Bitcoins. And you just go on and you find a counterparty who's willing to sell, and you negotiate where you're going to meet physically and how you're going to do it. And I did that. And the meet place was Washington Square Park in New York. And the process was I would be holding the money in a bag. They would be holding the other side of the money in the bag. We would hold up our phones to scan the QR code necessary. And then we would wait until the block had changed so that we were secure in the transaction. And then I would let go of the money and we would walk away. That was weird. It felt like a drug deal. I was in Washington Square Park. So it felt strange. And again, it just made me reiterate the thought that, well, this can't be anything if this is the way you buy it. And so again, I kind of waited a while, didn't do anything. And then in 2011, someone said, hey, try to buy some on Mt. Gox. That's a marketplace to trade them. And no one told me that stood for Magic the Gathering Online Exchange. I found that out afterwards. Because, Joe, I wouldn't have bought them had I known in the first place. Because as a financial guy, going to a place where they trade, trading cards online didn't seem like a good financial background to do this. But I did it anyway. Again, very strange. I sent money overseas to an unknown counterparty with hopes that they would actually buy some Bitcoin and put it in a wallet for me. It took about 40 days and a lot of angst before I really knew I had those Bitcoin. And so I went to a friend of mine and said, hey, build a wallet for me so I can get away from this weirdness because I'm not going to do this again. So I was very fortunate. I wasn't smart. I was just lucky that I was able to move all my Bitcoin, the ones that I bought in Local Bitcoin and these others, into a personal wallet, which I held. And of course, anyone who's watching who knows anything about Bitcoin knows what happened with Mt. Gox.
Yeah.
But once that, once those things were happening, I thought, maybe this is something. And it wasn't until Michael Novogratz, who now is a big name in crypto, but at the time he had been a client of mine when he ran Fortress in traditional FX, sent me an email and said, hey, I heard you're looking for something. It's Bitcoin. My response was, yeah, I own some, but maybe not. And his response was, no, definitely, this is going to be huge. Showed me what he was doing. And when you see someone that smart with that kind of financial backing doing what he was doing so early, it really inspired me. And I said, okay, this is going to be something. So then I just, as they say today, I was orange pilled. I decided that this was going to be amazing. And I tried to tell everybody I had ever worked with that Bitcoin was going to be something huge and they had to be involved. And it wasn't until one of my former partners, Justin Brownhill from Lava, and a guy named Neil DeSena, who has since passed away, who was his partner, created Senna Hill Partners, a merchant bank. And they both said, if you'll shut up, we'll give you $250,000 to go start a company. And I said, sold. So I got $250,000 from them and a little more from another company. And I founded the company in February of 2013 under the name Math Money FX, because I thought I was going to build a institutional trading system to trade Bitcoin. Now think about that. I thought that in 2013, institutions would be happy to trade Bitcoin on an institutional platform. Well, I was clearly wrong.
A little bit early, not wrong.
Early. And we're still early, right? Yeah. If you want to build an institutional platform today in Bitcoin, you're still early. And so I had already been so committed. I had already been taught what the value of Bitcoin was from a former quant where they explained the two generals proof and the double spin problem being solved. And And then I just realized this is a custody clearing settlement solution without a central counterparty. This is amazing. This can custody anything. And so why not build a version of a blockchain that is purpose for traditional finance, that will solve real problems? We changed our name to Symbiont, and we got to work building our assembly platform in 2014 before the Ethereum yellow paper was even put out.
And I want to dig into assembly, but I don't want to come off of the old school stuff yet, because there's so much interesting meat in there. So with Mt. Gox, there's a bit of an irony to the fact that it's Magic the Gathering, in that what has value, right? If you break value down, in Magic the Gathering to the right people, cards, those, they have a lot of value, some thousands of dollars. And so when you were evangelizing Bitcoin at that point, it feels like you were seeing the value in the utility, the cross-border transactions, and that clearing utility. And then, obviously you expanded that beyond even just the value transfer to other types of record holding and things like that. So, how do you best describe the flavor of the value that you were preaching at that time to anybody who would listen?
So I was really, you hit the nail on the head. I was really preaching the utility and preaching, really, I'm a free market capitalist. I was preaching the ills of the financial crisis, the centralization, the lack of transparency, the reliance upon these trusted third parties. That whole trust paradigm that was, with Bitcoin in the early days, the trustless, as we used to like to say all the time, that resonated with me, because the average person trusted these financial institutions and they failed them in the financial crisis. And so here was a system where I just have to trust math, and I can look at the math. It's open right to me. And someone, if I can tell me and figure it out that this is legitimate and this is working. And I no longer have to reconcile. Coming from financial markets, reconciliation, wow, is a pain in the butt. It still is today. So to have a system that you never have to reconcile, that has a golden source of truth where we all get at the same time, so no one gets to hoard it and have more power over someone else. That free market capitalism, that philosophy, that technology, all that in the big soup of one thing, that's what really inspired me. The idea that it was a cryptocurrency, I didn't really care about that, right? A store of value was something that was part of the definition of what a currency is. But at the time, we weren't talking about Bitcoin as a store of value as much as we do today, which I think, by the way, is the landed on use case that's going to have the most value going forward.
Right.
What we were really talking more about is that transfer of value across without that central counterparty. So that's really what excited me about Bitcoin itself. I'm pleased to say I've never sold a Bitcoin. So the store of value part has been great for me personally. But still, in the end of the day, what amazes me the most is the elegance of the technology and really what it's able to accomplish in this free market structure.
So you approached it as a purely logical creature, in that people say a value store or money or anything that can hold and transfer value is only as good as the size of the guns or the national resources that back it up. You were able to let go of that pretty quickly and say, no, this makes sense, and eventually it'll make sense to everybody or enough people. Yeah,
I've been a detractor of the Federal Reserve System for quite some time, even before my Bitcoin times. When I was in foreign exchange, you could see the damage that currency manipulation does. And if you look at empires, you can see reserve currencies last for a certain amount of time. The temptation to create larger amounts of supply, to justify it through wars, to really drive policy at the point of a gun, those things resonated with me. And although I wouldn't put myself in the crypto anarchist kind of category, I would put myself in that non-technical cypherpunk who believe that there are better systems out there. And the libertarian system with this as its economic thesis, to me, was sort of the sweet spot that I really believe in.
Makes sense. So next comes you developing your own blockchain, right? You have a set of, again, utility that's driving what you think the blockchain can do that's beyond what Bitcoin offers. And so in that, and to that extent, you're essentially a contemporary to some of the other blockchain developers, the Vitaliks of the world and Hoskinson or whatever. You're developing something similar to them, kind of in parallel to what they're doing. Did you feel that way as you were building out your blockchain and seeing these other white papers emerge? And how did you feel like you played into the scene?
So in a lot of ways, I felt like an imposter, and I kind of still do. The real genius behind our technology was my co-founder, Adam Krelinstein. Right? I will take no credit for the genius of assembly and the way it works and what it does. My contribution, my part of the symbiotic relationship, as it were, is really the vision of how to use the technology. The understanding of it itself, Adam was the creator of the counterparty protocol, which today you would call a layer 2, but it was the first true layer 2 on Bitcoin. He figured out a way to merge mine in 2013, tricking the miners to mine counterparty tokens instead of Bitcoin tokens. He did amazing stuff right out of college, never had a job, figured it out himself. He's just a genius. And I would put him in that ilk. Like I would put him in the Vitalik ilk. I would put him in the Charlie Hodgson ilk, whomever the group or person of Satoshi sort of in that area. The reason why I say I feel like an imposter is because the one thing I didn't do was buy into the utopian creation of a new economy, right? And as a matter of fact, in some ways, I became an enemy, even to a community that I love so much, the Bitcoin community and the Ethereum community, which is I want to solve problems for the existing markets. I believe that there is value in doing it. I don't think you need to abandon all the existing markets that exist. I think that this technology can do interesting things and transform them the same way I saw the transformation with matching. And I think that's one of the reasons why we didn't go with a token and build Ethereum while we built a fintech tool. It's because I saw that it worked already from a matching perspective, and I saw the changes that can occur. So, I would certainly put myself, in a different category. I'm better at seeing the application of these things, but it takes a lot smarter people to build it.
And to that end, you maybe are just super early again in that sort of the natural evolution of one of these things is, the societal sort of play, which again gets into that utopian vision and a lot of those super early adopters. But then at some point, as it crosses the chasm and starts to get adopted by companies and the more traditional infrastructure, you're actually going to be positioned there because you're already there essentially. So you're sort of just you're just building for the next logical step in the use case for blockchain.
In a lot of ways, we're doing things that are way harder. It is relatively simple to skirt regulation through your geographic domain, create code that's been dumped as open source, throw a token on it, and sort of let it run and buyer beware. And I think we're seeing that now, Joe, these horrific things that are happening in the crypto market. When Ethereum first came out, I'm fortunate enough to have bought it on the IPO. And I say that on purpose because that's the email that Vitalik sent me. And the headline of the offering document was Ethereum goes IPO. There's no doubt Ethereum was an illegal securities offering. I don't care what anybody says, And I said it very loudly and openly. This can't happen. This is a violation of rules and regulations. And that was the roadmap for all the other bad behavior that's happened since. And it bothers me because we're ruining a moment. We're ruining the opportunity for this to become ubiquitous infrastructure. And so by taking the path of saying we're compliant first, we know there are rules. We're not sticking our head in the sand, and we're going to abide by them. We're going to go to those institutions that are regulated, and we're going to bring them solutions. Sales cycles of 4 and 5 years to get behind the firewall at major financial institutions versus watching others become wildly rich by putting out questionable technology, skirting rules and regulations, pretending like rules don't exist. That wasn't a path that I wanted to take. And I hope that some of the bad behavior that's existed over, especially the past year or so, doesn't cause overreaction from regulators
as it has
and thwart all that. And so I hope that there's still the opportunity for that part of the world to grow and to be innovative. But for what we're doing, yes, I think we're still early. My board, when I come up with a new idea, says, stop. Let's not be 9 years early again. Let's execute on what we are because we're here at that moment. And so, I'm excited about where we are right now. The technology is mature. It's proven. It's solving real problems that are going to bring real value. And I hope that market infrastructure changes in a way in which when we look back in 10 or 20 years, we say, oh, I remember that time when we had bad transparency and we trusted these institutions. Now we all have the information at state. We have a decentralized world in which we all perform our roles, and markets are more efficient and more free.
That's great. And ideally, you'll be one of those early you tasted the benefits of being one of the few no action providers, and it sounds like you're positioning yourself to be there again for blockchain. I want to finish up just because you have such a deep understanding of the SEC and you've played there and you're preparing to play there again. How do you see the different utility of crypto? And I always lament the fact that it's called cryptocurrency because they're obviously not currencies. There are a lot of different things, but if we sort of break down the use cases to, at some point, there's going to be transactional, and there's store of value, and then there's this stuff that funds projects. How granular do you think the SEC is going to be and how they understand these different use cases? How do you see them, and how do you think they play out from a regulation standpoint as we move forward?
So first of all, I feel like it's been way too slow. The reaction. I think we were there at the beginning. We helped create the FinTech Hub. We actually knew Valerie pretty well before she took over at the FinTech Hub. I'd been in and out of the SEC starting in 2014, trying to help craft some rules that would make sense or at least modify rules that existed, like the transfer agent rule. But I think now what has happened is that we've moved into a consumer protection area, and that's dangerous, right? Coming from foreign exchange, that got very dangerous in the late 90s for margined FX, and it led to the Commodities Modernization Act of 2000. I helped craft some of that language for that because I was in the FX space. That then led to every FX shop having to become a member of an FCM, a member of the NFA and CFTC. And that kind of constrained things, but it helped the growth of that business over the long term. I think now that the SEC is going to come in and start with where they can enforce, and that's these marketplaces that like to call themselves exchanges. They're going to start coming in and saying, you must do this, you must register here. These things have to be identified in certain ways. And I think the worst possible outcome is a sweeping brush that says everything's a security except for Bitcoin and Ethereum. And then everything stops dead in its tracks. And it goes to weird places. And then we get consumers in the US chasing the speculation and taking more risks rather than the result of taking less risk. But I do see that kind of on the horizon. I'm very fortunate to be a founding member of ADAM, the Association for Digital Asset Markets. We're an advocacy group with some of the largest participants in the world going out and trying to speak to regulators, talk to government. We're helping with the Loomis bill that's trying to counter Joe Biden's executive order. We're trying to do good work that's rational and thoughtful. But I think when you get Terra, when you get Beanstalk, when you get these other things that are breaking their pegs and people are losing more and more money, it's changing the narrative. It used to be where the true believers didn't necessarily get upset when something went wrong, right? When the Dow hack happened, the community resolved it, right? But today, those aren't the same people that are speculating on, Robinhood or speculating on Coinbase or Genesis or these places that don't really understand what the philosophical thesis is and all these things. They just want to trade. And when they wake up one day and it's all red and it's all red and it's all red, and then something goes from 20 billion to zero, that changes the narrative, and they start screaming for help and looking for someone to bail them out. And when you start to hear those complaints, which is what didn't happen early on with the SEC, that is now happening today, they're forced to react because their mandate is a consumer protection mandate. And these are retail players. These aren't big institutions that are qualified and accredited and all these things. These are people who are using their COVID dollars to trade crypto. That is a recipe for overregulation and heavy enforcement. And I think that is where we sit today. And I think we're probably going to start to see some of that happen pretty soon.
Well, I don't want to end on that somber note, man.
But look, but things trade in cycles.
Yes.
We had a .com disaster, right, in 2000, 2001, and out of it, we got amazing things. So cycles are faster nowadays. I think that we can be back in a good cycle. We believe that we'll integrate these digital assets into our enterprise solution and try to bring more safety and security for them on our kind of platform. So we'll be interacting with Bitcoin, very soon, and we think others, as they grow and mature, will be interacting with them, and hopefully we can be that bridge between the two.
And is it at least safe to say, in your opinion, that the blockchain and crypto is a different animal than sort of previous financial instruments, in that it's more aggressively borderless, and also it truly does bring functions like loaning, staking, the compound, those types of DAOs, bring some of those opportunities for money making or services to the masses that were only reserved to bigger institutions before. I mean, is it safe to say that those elements make this a slightly different animal than sort of faster trading or marketplaces of the past?
There's no question. That is the unique thing about this. It's the first global financial movement that we've ever had, where we're used to this kind of interesting stuff in the US, but there are other countries who have never had the ability, even had markets at all, much less these kind of more free, open markets for opportunity to innovate. That leads to great things, but it also leads to bubbles. It also leads to contractions. But it is the first in history. Like, people want to compare Bitcoin to the tulip bubble. Well, that's crazy, because that was confined to the Dutch, right? It wasn't a global thing. This is a global thing. And so you get this movement around, you get no ability to have a unified regulator, and you hope that the community can do a lot of its own regulating. So I'm always hopeful, I'm always optimistic, because I do believe that the future of infrastructure of markets is decentralized and distributed. It's just a question of what system and how that will end up playing out.
Mark Smith, founder of Symbiont, really appreciate you sharing your time and insight on Decent Cities.
Joe, thank you. Anytime, I'll be back.